Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. My name is Shuhada binti Zulkifli and I am from Bachelor of Science Financial Mathematics from Faculty of Science and Technology. Today, I will present my thesis entitled The Determinant of Non-Performing Loans, the Comparison between Conventional and Islamic Banking in Malaysia. In this presentation, it has four major parts which is first introduction, second data and methodology, third is result analysis and discussion, and last is conclusion. Background of study. What is financial institution? Financial institution is a foundation that engage in the financial transaction processing market. Next, for non-performing loan, it is the payment of principal or interest is in area of 3 months or more. Or in other words, NPL or NPF can be defined as a loan that not been able to pay by the debtor after 90 days. The type of data collected was secondary data obtained from Bank Negara Malaysia for dependent variable which is NPL, and for independent variable the data collected was from First World Bank's database. For macroeconomic variable and for bank specific variable the data collected from annual report for each bank. Thus, a total number of periods being used in this study is 8 years from 2012 until 2019 from annual report of 5 Islamic bank and 5 conventional bank. So, for research framework, in order to achieve the first objective which is to identify the comparison on the non-performing loan rates between conventional bank and Islamic bank, we can use t-test for two samples assuming equal variance. And for the second objective, to identify the determinant of NPL or NPF, use panel data regression, pool OLS or random effect. And for the third objective, for comparison of non-performing loan determinant, we also can use panel data regression, pool OLS or random effect model. So for the first objective, which is to compare the value of mean between NPL and MPF. So first of all, we need to run the F-test analysis. The null hypothesis for F-test hypothesis is there is no significant difference in the value of variance, while the alternative hypothesis is there is significant difference in value of variance. So in this study, the value of the p-value indicates that greater than 5%, thus we cannot reject the null hypothesis. This indicates that we can use t-test of two samples assuming equal variance. And next, we run for the t-test analysis. For t-test analysis, the result indicates that p-value is less than 5%, thus we reject the null hypothesis. So it can be concluded that there is significant difference between the means of MPL and MPF. Furthermore, the value of mean in this table indicates that MPL have more higher value of MPL in conventional bank have more higher value than MPF in Islamic bank. Okay, next for objective 2, which is to identify the determinant of non-performing loan in conventional bank and Islamic bank. So thus this is the model 1 for conventional bank. Okay, in order to choose the most appropriate model to be used for MPL model, we need to run Bruch-Pagan or LM test and Houseman test first. For LM Bruch-Pagan LM test, in order to choose between pool OLS or random effect OLS. So the study indicates the p-value of LM test is less than 0.05. So, we reject the null hypothesis that POLS is more suitable. So, random effect is more appropriate. Then, we run the Houseman test in order to identify whether to use random effect or fixed effect. So, in Houseman test, the value indicates the p-value is more than 0.05%. For the Houseman test, the null hypothesis indicates that random effect is more suitable, and the alternative hypothesis is fixed effect is more suitable. So in this study, the p-value indicates that more than 0.05, which is 0.089, so we cannot reject the null hypothesis. So we can conclude that for model 1, the random effect model is more appropriate. Next, after we identify that the most appropriate model to be used for NPL model in conventional bank is random effect model, we need to run the diagnostic test for random effect in order to make sure it is fit enough to be the model in this conventional bank. So, there are two tests need to be run in under diagnostic. First, we need to test for presence of autocorrelation using word-rich test. The null hypothesis is the model is do not have the presence of autocorrelation, and the alternative hypothesis indicates that the model is suffer from autocorrelation. So the result of word-rich test on random effect model indicates that p-value less than 0.05 with 0.0431. Thus, it can be concluded that we can reject the null hypothesis. So, it indicates that random effect is present of autocorrelation or suffer from autocorrelation problem. Okay, next, we run the test for heteroscedasticity, which is modified Wald test. Modified Wald test also indicates the p-value less than 0.05. So we reject the null hypothesis that the model is not suffer from heteroscedasticity. Thus, we can conclude that this random effect model for NPL and conventional bank is suffer from heteroscedasticity. So, because of random effect model in MPL for conventional bank is suffer from autocorrelation and heteroscedasticity problem, so we use generalized least square or GLS regression in order to fix the autocorrelation and heteroscedasticity issue. So we will discuss the result for random effect model based on the generalized least square regression. So at the 5 confidence level, it indicates that capital adequacy ratio have positive and significant relationship with NPL. It means that one unit increase in CAR will lead to a 0.129 unit increase in NPL. So this study is support with finding from Partiwi and Hindasa from 2014. Okay, next at 5% confidence level against the loan growth or LOA have negative and significant relationship with NPL. So, we can conclude that the increase in one unit size of loan will lead towards a decrement in NPL by 0.069 unit. But this result is not in line with study from Malimi 2017. However, both of the macroeconomic variables of GDP growth rate and interest rate do not show any significance with NPL at any confidence level. Thus, we can conclude from the model 1, thus capital adequacy ratio and loan growth has the significant determinant for NPL in conventional bank. For the second model, which is for NPF in Islamic bank, okay, first of all, in order to choose the most appropriate model to be used in NPF model, we need to run LM test and Houseman test. So, after we run the Bruch-Pagan LM test, the p-value indicates that's more than 0.05. Thus, it indicates that we do not reject the null hypothesis. So, the pool OLS is more appropriate in this NPF model. So we doesn't need to run the Houseman test because LM test already indicates that it is more appropriate to use pool OLS rather than random effect. Okay, next, in order to make sure that pool OLS model is fit enough to be model of NPF in Islamic bank, we need to run the diagnostic test for autocorrelation and heteroscedasticity test. So, for well-reached tests for autocorrelation, the p-value indicates less than 0.05. Thus, we can reject the null hypothesis of there are no autocorrelation problem in the model. So, it can be concluded that pool OLS model is suffer from autocorrelation problem. Okay, next, we run the test for heteroscedasticity problem by Bruch-Pagan test. Okay, so the p-value also indicates less than 0.05. Thus, we can reject the null hypothesis that there is no multicollinearity, there is no heteroscedasticity problem in the model. So thus, we can conclude that pool OLS model is suffer from heteroscedasticity. So at 5% confidence level, the interest rate have positive significance with MPF, and this result is supported by both Fendi and Ropel. And the loan growth have negative and significant relationship with MPF. But at 1% confidence level, bank size have negative significance with MPF, while capital adequacy ratio have positive significance with MPF. So both of these results is in line with the study from Yulianti, Eka, Aliamin Ibrahim, and Ridwan 2018 of the study on 81 Indonesian bank. But for macroeconomic variable of GDP growth rate GDP is positive, but did not show any significance at any confidence level. So it can be concluded that IR, loan growth, bank size, and capital adequacy ratio have a significant determinant on non-performing financing of Islamic bank. Now, this is the result for objective 3, which is to compare the difference in determinant of NPL and MPF. This table summarizes all the macroeconomic variable and bank-specific variable that involved in this study. For non-performing loan, we can see that only loan growth and capital adequacy ratio from bank-specific factor that will affect the value of non-performing loan. Meanwhile, in Islamic bank, there are interest rate and all of bank-specific factor, which is bank size, loan growth, and capital adequacy ratio. These four variables will affect the performance of non-performing financing in Islamic bank. Thus, there are difference in determinant of MPL and MPF. Okay, first of all, for conclusion, the macroeconomic and bank-specific determinant of non-performing loans and financing in conventional Islamic bank have same relationship in terms of positive or negative, but show only a different sign in the level of significance at any confidence level. And for the recommendation, I can recommend for the future research can be carried out by including the particular internal factors of the bank, such as independence, such as credit analysis, staff efficiency, loan management, lending policy, and lending behavior. So this is the reference I use in order to complete this study. Okay, so that's all from me. Thank you.